Welcome to Talk Tickers, where we break down the earnings calls that matter. Today, it's all about Silicon Motion, ticker SIMO. They just put out a Q2 print that beat estimates, and pretty handily, I might add. But the stock, it went absolutely nowhere. So let's dive into what's going on here. Okay, let's kick things off with the headline number that really should have moved the stock, a massive beat on earnings per share. The street was looking for 53 cents, and SIMO came in and delivered 69 cents. That's a huge beat. And, it wasn't just on the earnings front. Revenue also came in super strong, clearing the high end of expectations by almost $19 million. So a really solid beat on both the top and bottom lines. So here's the snapshot, right? You've got a clean beat on the top and bottom line, some really healthy sequential growth quarter over quarter, and solid gross margins. The only real blemish on this whole thing is that negative year-over-year number on revenue. Now, what's really interesting here is management's confidence. I mean, despite the kind of mixed macro picture, the CEO came out and set a very aggressive target for the end of the year. $1 billion run rate. That's a big goal. So how are they going to get there? Well, management actually laid out a pretty clear 4-step growth story. It's really all driven by their next-generation product cycles. And a key part of this whole diversification story is the automotive segment. Management now feels confident it's going to account for at least 10% of revenue by 2026, and they're landing these huge deals with major brands. We're talking Tesla, BYD, and Toyota. And all that confidence carried right into the guidance they gave. I mean, the Q3 forecast implies another, 10 to 15% sequential jump in revenue, plus expanding gross margins. That's a pretty bullish outlook. But then you get to the Q&A, and that's where you can see where investors are getting a little skeptical. They really zeroed in on the rising operating expenses, the negative cash flow, and just the general timelines for some of their new enterprise products. And this all brings us to the market's verdict, which was weird. The stock gapped up at the open, traded really strong for most of the day, and then it just completely faded to close flat. A total reversal. And get this wasn't on some light, sleepy trading day. Volume was more than double the daily average. So what that tells you is there was significant institutional selling pressure coming in to meet all that initial strength. So the really crucial point here is to understand this disconnect, right? What did the market focus on that completely overshadowed all the positive headlines? And this really illustrates that push and pull perfectly. You had the market weighing the strong operational results against these concerns about cash flow, costs, and this is a big one, the fact that the stock had already run up a ton coming into the print. All right, so let's move on and see how this all builds into a forward-looking thesis. Our call here is outperform. We believe the market really over-rotated on that near-term cash burn and is honestly underestimating the margin and revenue power of these PCIe 5 and automotive design wins that are going to be ramping into 2026. So what's the trade here? Well, that big fade on earnings day provides a potential entry point. It's interesting. The options market saw a lot of interest in the December calls after earnings, which suggests some people are positioning for a move back towards the highs as the company proves out its execution. This is not financial advice.